In this video, I'll explain why Florida investors should be careful with Venezuela-linked opportunities. And by the end of this video, you will learn the hidden legal traps that could cost you everything and how to protect your investments before problems arise. I'm Santiago Cueto, board-certified international business law expert and best-selling author based right here in Miami, Florida. Look, I've spent years helping Florida investors navigate the complex world of international transactions. And today, I'm going to share what you absolutely need to know. All right, imagine this, a promising real estate deal. Returns that seem too good to be true, a Venezuelan connection that raises red flags that nobody wants to see. By the time the truth comes out, it's already too late. Florida has always been the gateway to Latin America. Miami especially attracts investors from across the hemisphere. Venezuelan nationals have historically maintained strong business ties here, but things have changed dramatically. The political and economic crisis in Venezuela has created a perfect storm. Now the capital flight has accelerated. Money is moving across borders faster than ever. Some of it is legitimate, some of it isn't. And that's where the danger begins. I've seen smart investors get caught in situations they never saw coming. They thought they were making a simple business deal. They didn't realize they were stepping into a legal minefield. The consequences weren't just financial, they were career-ending. Now here's what most people don't understand. Venezuela-linked opportunities come with layers and layers of complexity that don't exist with other countries. These layers can trap you even when you think you're being very careful, even when you think you've done your homework. All right, let's talk about the elephant in the room, U.S. sanctions. The Office of Foreign Asset Control, known as OFAC, maintains extensive sanctions against Venezuela. And these aren't suggestions, they're federal law. Breaking them can result in criminal charges, and they have. It can result in massive fines. It can result in seizure of your assets. But here's where it gets tricky. The sanctions don't just cover the Venezuelan government. They cover individuals connected to the government. They cover companies owned or controlled by sanctioned persons. And they cover transactions that could indirectly benefit sanctioned entities. You might think you're investing in a private Venezuelan business, and you might believe it has nothing to do with the government. But if that business has ties to a sanctioned individual, you've just violated federal law, even if you didn't know. The federal law doesn't care. Even if you had no intention of breaking any rules, federal law doesn't care. I've worked with clients who discovered sanction violations after the fact. The stress is unimaginable. The legal fees are astronomical. And the reputational damage, well, that lasts forever. Due diligence becomes exponentially more important. You can't just run a basic background check here, guys. You need specialized screening. You need to understand the ownership structure. You need to trace connections that aren't always obvious. Now, if you're finding this information valuable, do me a favor and hit that like button right now. It helps more investors like you find this content. And subscribe to my channel so you never miss critical legal insights that could protect your business. Now let's talk about something that keeps me up at night, due diligence in Venezuela. It's nearly impossible to do right now. Public records are unreliable, government databases are outdated or inaccessible, and corporate registries don't function the way they should. You can't just verify information the way you normally would. Think about how you usually vet an investment opportunity. You check corporate filings, you review financial statements, you verify property ownership, you confirm licenses and permits. In Venezuela, none of that works properly anymore. I had a client who wanted to invest in what appeared to be a legitimate manufacturing operation. The financial statements looked good, the business plan was solid, everything seemed fine on the surface. But when we tried to verify the company's legal status, we hit wall after wall. The corporate registry had no recent updates. Tax records were impossible to obtain. Property ownership couldn't be confirmed. We eventually discovered the company's legal status was questionable at best, and my clients walked away. He was frustrated, but very grateful. And guess what? 6 months later, that same company was involved in a major fraud investigation. And this isn't an isolated incident. This is the normal. in Venezuela right now. Venezuela's political situation adds another layer of risk that you simply can't ignore. The country has competing claims to government authority. International recognition is divided, and legal frameworks are being contested. What's legal today might not be legal tomorrow. What's recognized by one government might be rejected by another. Imagine signing a contract with a Venezuelan entity. Which legal system governs that contract? Which court has jurisdiction? If something goes wrong, where do you even file a lawsuit? These aren't theoretical questions. They're real problems with real consequences. And currency controls make matters even worse. Venezuela has one of the most restrictive foreign exchange regimes in the world. Getting money out of the country is extraordinarily difficult. Even if your investment performs well, repatriating profits becomes an absolute nightmare. I've seen investors make money on paper, but never see a dollar in their bank account. The currency restrictions trap the returns inside Venezuela. They couldn't convert bolivars to dollars. They couldn't transfer funds abroad. Their successful investment became worthless. And economic instability compounds everything. Hyperinflation has destroyed the currency. Supply chains have collapsed. Basic infrastructure is failing. And even if your business model is sound, the operating environment makes success nearly impossible. Now here's something most investors don't consider until it's too late. Reputational risk. Banking relationships can be destroyed by Venezuela connections. Major financial institutions are extremely cautious about Venezuela-related transactions. They don't want the regulatory scrutiny or the headaches, and they don't want the risk. I've seen clients lose their banking relationships because of perceived Venezuela exposure. The bank simply decided it wasn't worth it. They closed the accounts. Finding a bank willing to work with you becomes incredibly difficult. And business partners get nervous. Investors back away. Opportunities dry up, all because of an association that seemed innocent at the time. Look, I'm not saying that every Venezuela-linked opportunity is bad. I'm saying the risk is extraordinarily high right now. The legal complexities are real, the financial dangers are substantial, and the reputational consequences are severe. Now, if you're considering any investment with Venezuela connections, you need specialized legal counsel. You need enhanced due diligence, and you need to understand exactly what you're getting into before you commit a single dollar. Don't let the promise of high returns blind you to the risks, and don't assume you can navigate these waters without expert guidance. The cost of getting it wrong is simply too high. Now, if this video helped you understand these risks a little bit better, please like this video and subscribe to my channel. I create content like this every single week to help Florida investors make smarter and safer decisions. I'm Santiago Cueto, your Florida business attorney. Be sure to watch more of my videos right here.